So you say what we're seeing right now in the markets is just an ongoing correction. So what's the signal for you that the selling is over with?
I'm not suggesting it's over with, Brian, but I don't think this is a long, dark, deep problem that we have to grapple with. I think going into September, most of the valuation metrics that we track relative to the last 15 years was essentially buried the needle. It was in the 100th percentile of its historical range. The only metric that would suggest the market was fairly valued would be through the lens of the 10-year Treasury yield. Beside that, if virtually, you name it, price to book, price to sales, forward, back, was in the 99th to 100th percentile. So that would be one indication. The other, however, is on a more positive note is while we're getting this sell-off, and sure, the NASDAQ off, 10, 12%, some of the big go-go tech names off nearly 20%, that credit spreads remain relatively stable. The fact is that the Fed has done a decent job of keeping liquidity in the market. We don't see lenders tightening their purse strings. We don't see credit spreads widening, even among, when we track triple C versus high yield, still holding its own. So I take that as comfort. And we all know that the Fed last week said, they're pretty much flapping their arms, doing everything they can. And it's really Congress's ball that needs to act to try to get more stimulus to help small businesses, help the 11 million Americans out of work. And now with, Ruth Bader Ginsburg's untimely death or tragic death, we get a lot of the air sucked out of Senate to focus on potential replacement and not necessarily a stimulus program.
Jack, to your point, how much of the selling that we're seeing is investors simply taking money off the table, cashing in some profits after the market was flying so high for so long, led by those tech stocks? Or is a lot of this really about concern that we're not going to get a stimulus package out of Washington anytime soon, especially now that there seems to be this preoccupation with finding a successor to Ruth Bader Ginsburg?
Yeah, I think it's, Alexa, I think it's the latter. I think it really is more of an economic scenario that we're not going to get the stimulus. We see it today, with the cyclicals, the energy stocks down way more than the tech stocks. So I do really think that this is just that missing piece that's, investors had assumed would be coming with a little wrangling. And now this appears to be somewhat a setback in that regard.
Jack, Dallas Fed Chief Robert Kaplan out with some comments this morning. He's voicing his concern about excess risk-taking in the markets. Where are you seeing pockets of overvaluation just outside the tech industry?
Sure. I think there is, certainly designed risk-taking. I did hear his interview on Bloomberg this morning. I think that what he said was he did not vote along with keep rates low forever. He wanted to be able to have at least future governing bodies to have an option to perhaps change their stance. But I do think that, as he said, and I think the Fed sends the message loud and clear, if you're a saver, or if you're a pension fund, or if you're investing for income, you're going to have to take more risk to reach that goal, the investment goal that you're hoping to achieve.
Jack, do you think that this market has priced in a winner on November 3rd? And if so, who?
I try to triangulate around, and I'm not convinced that the market has priced in a winner. I think that one of the ways I track is China stocks relative to the U.S. And map that against a predicted chance of Biden victory. That does seem to be pretty highly correlated. Now, that said, there are some fundamental reasons why China should be accelerating. Their trade is pretty much back to where it was. A lot of their industrial growth is back to where it was. So it's hard to really say that it's trading off the election. I also think that there is this overhang. The fact that if we take corporate tax rates and move them from 21 to 28, obviously a candidate, Biden, would need a Democratic Congress to help him do that. But to me, that's worth about 10 percentage points, maybe a little bit more off the market. I don't think that's what we're seeing right now. I think this is, as I said, we're looking at near-term economic expectations and adjustments, and not necessarily an election, which is surprising. We usually see kind of the market tending to coalesce around an outcome in early August.
Jack, with the 30 seconds we have left, is there one positive catalyst you see coming in the market before year end?
Yeah, I mean, I think there's one positive catalyst right now. And the fact is that if you look at investor sentiment, we're in the lowest decile of its historical range, which means that anyone, with widespread bearishness, anyone who's inclined to sell has probably already sold. We've got $7 trillion of cash sitting on the sidelines. Money has been coming out of the market pretty much all summer. So I think that, to me, in a world where investor expectations are so low and a market is a reflection of reality and expectations, much better to have, low expectations and have a ability to beat than high expectations. That would be my catalyst near term.